Hello and welcome to Dialogue. As the two sessions continue in Beijing, China's top officials explained in an intensive press conference the country's economic and development plans for 2024. What were the highlights of the conference? What is the path forward for China's economic growth and regulation in 2024? And what are the latest changes in the stock market, the property market, and foreign investment for this year? Join us for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Gong, professor at the University of International Business and Economics, Warwick Powell, senior fellow at the Taihe Institute, and Wang Yaojing, assistant professor from Peking University. So welcome to Dialogue. At the conference on Wednesday, leaders from China's National Development and Reform Commission, Ministry of Finance, Ministry of Commerce, Central Bank, and the Securities Regulatory Commission explained China's economic and development plans. This is a long and informative conference there. So Yaojing, I wondered what were your key takeaways from this very lengthy and also detailed, informative media conference here?
Yes, I really like the word detailed that you use. It's very detailed in not just the various departments that involved in various aspects of the economy, but also the very detailed policy measures that will be implemented to ensure economic growth. And I think that the highlight is that the government is trying to relocate the most possible resources into the private sector, into the market, while trying to cut back its own expenses to ensure that the economic growth is up to target.
Mm-hmm. So Powell, I mean, the impression is, a lot of people have pointed out, is like, you see this consensus or concerted efforts of the Chinese ministries, central government and the government at different levels to work toward one goal, that is to grow the economy in 2024. I wonder, is that also your impression?
Look, there's always the underlying imperative to sustain economic development and growth, because without that, China could not continue to achieve and head towards its 2035 ambitions and ambitions further down the track for economic and social development. So without a growing economy, those things are very difficult to achieve. I think what's interesting about where we're at today is not only is there detail, but what that tells us is a determination to continue with what is actually a very significant balance sheet restructure, if you will, and an overall restructure of the composition of the Chinese economic structure, as we evolve from an older model, which was heavily reliant upon property and traditional low-value, low-cost exports, to a very different economic model going forward.
Mm-hmm. Well, speak of the model, John. This is a very comprehensive matter in terms of boosting the economic development. You have the involvement, of course, of different ministries, as well as the central bank and also the Securities Commission over there. So the target is 5%. It requires obviously this contribution, either policy-wise or other measures, to show up this demand in consumption or the development in different sectors there. 5%, ambitious or so realistic here?
It's about 5%, actually. That means it could be either lower than 5% or higher than 5%. But I think in all likelihood, we're going to see a number maybe a little bit over 5% by the end of this year. I really don't think it's a really ambitious goal. I mean, this is the same target last year, and China, achieved a better than expected growth in a very difficult time last year. And this year, at least I think in the beginning 2 months, there are signs that the economy is recovering quite okay. I mean, the expenditures are certainly coming back, especially I think in the service sectors. There's a big takeaway from my perspective regarding the measures to stimulate consumption. I think there's a slew of policies they have announced today, and also containing Premier Lee's work report about stimulating consumption. This is a big challenge in my view. I think inadequate aggregate demand has always been a problem for quite a few years for China's economy. We are a manufacturing state, and we manufacture more than we can consume, and we can't exclusively rely on exports to grow to prosperity. So I think having a healthy domestic consumption sector comparable to the level as being witnessed at more developed countries is something we should be targeting for. And this is a very good step in the right direction. So I think in regard of that, with the consumption slated to increase quite significantly, I think 5% target should be something within reach. It's not that ambitious in my view.
Mm-hmm. Well, on that front, Yaojing, so what are the measures to boost the consumption?
Well, consumption to draw a big picture of consumption is about 55 to 60% of the GDP. And how important is consumption vary. So 2023, the final consumption is contributing to the overall GDP growth for about 4.3 percentage points, which is almost the entire growth is coming from the consumption level. And there are several ways to boost consumption. One is, of course, the focus on the labor market, that to ensure that the income from the demand side is stable and is stably increasing, hopefully. And then the other one is that we want to give the economy some kind of a stimulus to ensure liquidity is there, so that that the money would go into the consumption market.
Mm-hmm. Well, at the press conference, the ministers or the the senior officials, they talk about this new round of large-scale equipment upgrades and the replacement of old consumer goods. This is with the new ones. John, this is not the first time China is to pursue such a practice. Yeah. I mean, how big a push is that?
This is essentially accelerated depreciation. I think it's a measure to stimulate people to throw out old clunks and buy new stuffs. And historically, this policy has been implemented a couple of times in the past, and they have all been quite successful, as far as I can understand. It used to be the case that there's a policy for promoting vehicles, for example, in rural countryside. There's a policy of promoting appliances in rural countryside. I mean, all these policies have been proven to be quite effective. And in this case, it's across the board. It is targeting big ticket items. Certainly, I think expenditures on these items will stimulate a lot of growth in these sectors. These are mostly high value added manufacturing products. I think especially regarding vehicles, for example. It's a huge sector here in China. I think it's precisely policies like these that can stimulate demand, stimulate consumption. And I can't emphasize enough the importance of consumption in China's GDP composition.
Mm-hmm. Warwick, many have suggested actually, or urged the government to hand out the cash to the consumers, just like other countries, did or do. Why does the Chinese government, why does the Chinese side basically, choose not to do so? Obviously, there are, their own concerns here, own consideration.
Look, I think it's important to actually understand what is being talked about here, and the specific commentary around the emphasis on the demand side actually talks about demand. And demand covers both investment demand as well as consumption demand. So it's actually two sides of the consumption coin, so to speak. I've also, through our own research, I'd actually update some data in relation to the proportion of GDP that household consumption demand occupies. It's actually close to 69% now. And that is on an upward trajectory from the 55%, which was the case in 2008. So there has actually been a rising trend in terms of household consumption as a proportion of GDP over the last 16 years. And that's driven by doubling of household incomes over the period. It's also underpinned by a reduction in the Gini coefficient over the last 14 years, which basically means that income inequality has actually been narrowing over the last 14, 15 years. So these factors are actually contributing to significant household consumption growth. But the key here is actually around how stimulating investment demand will actually drive the economic machinery forward, because the investment demand will see the replacement of old with new that will underpin a transition to higher technology, higher productivity, which will also drive household income growth, which will also therefore drive consumption growth. The last thing I'll just draw your viewers' attention to is the fact that these days Chinese manufacturers exports about 13% of total output. What that means is that 87% of total manufactured output is consumed by the domestic economy. In 2004, that figure was 18% exported and 82% consumed domestically. And that was at a time when exports made up the highest proportion of total outputs. So the Chinese manufacturing sector is in many ways far less export dependent than it was 20 years ago.
Mm-hmm. So that's a big change, actually. It's a gradual process, but also, I would say, prominent change so far.
Yeah, for size of an economy like China's, it's just impossible to rely exclusively or mostly on exports to drive growth. I think we're going to run into huge political problems with many countries. Right, China's trade surpluses with many countries actually quite significant. We need a domestic economy. Just historically, you can look at a couple of precedents. The United States used to be also very much dependent on exports, but now, of course, it's almost very much domestically consumption-driven economy. In a way, I want to make this point. China's economy is more and more looking like a developed country. As a matter of fact, we're actually getting very close to the threshold point for high-income country in the World Bank's GNI, gross national income classification system. So, on this point, I tend to agree that China is becoming more and more less like a developing country, more and more like a developed country economy. And for a country of that size, usually the consumption portion is fairly large, the growth rate is not that excessively high, doesn't rely exclusively very much on exports, I would say.
Mm-hmm. Well, partially related to the consumption, stimulus probably, or Yaojing, the central bank governor talked about, there's enough space or enough tools in the toolbox in terms of cutting reserve ratio requirements or cutting the interest there. So obviously, the monetary policy-wise, the government is ready to step in if there is a need. Is that the case here?
Yes, of course. Because the Central Bank of China has been very careful with this, using its tools over the years, even though that we experienced the public health crisis, that we didn't really do a drastic interest rate cut like many other countries in the world. So that saves us a lot of policy space to use right now. And even last year, where the economic situation was in a very difficult time, then the rate cutting pace was still very cautious. They've been relying on very prudent monetary policies, and of course we are expecting that, and of course the Pan Gongsheng also said that they will ensure the price will be moderately going up to ensure a stable CPI, a healthy CPI for the economy.
Mm-hmm. Well, along with the consumption of domestically, of course, is also another sector that's also part of the challenge people have been talking about. The show up of the confidence and also the investment in the private sector. Warwick, the NDRC chairman, did talk about the importance of the private sector private investment, rather. He said, that accounts for more than 50% of all investment. Obviously, the Chinese government is going to, for this year at least, to encourage and support the private enterprises by all means. Are we receiving this very positive message, at least so far, if not the policies, to support the private sector here?
Look, I think it's also important, again, to put it into the context of the evidence that we have available. And the evidence for 2023 is that non-property related private sector investment was actually rising by about 9%. So aside from the property sector, which I'm sure we'll touch upon later, the private sector actually led a significant spurt in investment. And we've seen that in the rising capital intensity in manufacturing, for example, as well as investments in high technology and science-driven enterprises. So in that sense, I think the policy focus for 2024 is very much a continuation of the emphasis that actually took place in reality in 2023. And it is, again, part of a wider program, a multi-year program to restructure the Chinese economy so that it is on a new trajectory with new foundations and new growth drivers. A developing economy can't stay the same forever. You have to keep moving and developing new industries, using new science and new technologies to address new challenges and problems. And this is exactly what's happening at the moment.
Mm-hmm. Speak of this, new technologies or this new growth drivers, let's say. There's in this draft budget by the finance ministry, reporters have found out that there is increase of 10% in terms of investment in science and technology joined here. That's much more, let's say, than last year's increase of 2%. Mm-hmm. And also, this amount of increase or scope of increase is larger than in any other areas, either diplomacy, public security, education, or defense. Mm-hmm. What do you make of that? Does it have something to do with, often we talk about new quality productive forces here?
Yeah, so we have a new term here, new quality productivity forces, what they call it, right? It's we're talking about investment in these new sunrise industries or technologies that are critical for the country's competitiveness globally. I think we are at a very critical era in that technology evolution is taking a profound step right now. All of a sudden, many things are rising on the horizon. Not to mention, there's also this background context of Sino-US competition, which is pretty much centered on technology competition, right? So I think the government has been always very keen on making sure investments are adequately made in these critical technologies, and I think Chinese companies overall are very moving very fast. They also are willing to bet on these new technologies, willing to invest actually. Even though this narrative or this reports in the West talking about slowdown in investment and lack of investor confidence, blah blah blah. I think in these critical areas, I don't think investment is slowing down. On the contrary, I think it's actually accelerating. Some of the funds are driven by the private investors. Some of the funds are actually driven by local governments. Various local governments are very keen on driving this growth in their localities, right? So I think this is a critical area, and I don't think that China is going to stand by and watch this technology evolution while China is just lagging behind. That's not going to happen in my view.
Mm-hmm. Well, Yaojing, you are nodding your head. So this is, in line with the Chinese, foremost task, that is high quality development, obviously, and also in which innovation-driven growth is the pursuit of the country. And of course, it's also about the U.S., let's say, crack down the U.S. containment of technology on China. Do you think this is the right response, the right move to increase the Chinese investment in science and technology here?
Oh yes, definitely. I think that the emphasis on trying to catch up in the technology department and trying to create our own technology so that we won't be really restrained from any of the outside risks. That has been the emphasis for at least the last 10 years. And I want to echo what John have put is that I think the society is now have this consensus that the only way to go forward is to break through in the technology area, and that we have some successful cases. For example, the electric vehicle that has been boosting the market's confidence in investing in these new tracks that might be able to surpass the current technology. So I think this is definitely the way, and it's that China has prepared itself even years before, for example, in education. So we see that the Minister of Education has developed these projects or strategies to make sure that we have enough engineers, we have enough scientists growing from the universities. So that gives us a lot of the prepare for making sure that all the forces are joined together and make this breakthrough.
Mm-hmm. Warwick, of course, CGTN looking at this issue from like Australia, from overseas. China, this is not today, starting to emphasize innovation, science and technology investment. China has been doing this for years. It has been successful in this, let's say, EVs, solar products, and also the batteries. That's rather successful. It's so successful that we are seeing barriers being erected in the European continent and, of course, in North America there. And what do you make of that, this 10% increase of investment in science and tech?
I think it speaks volumes to the commitment of government to a long-term vision which is focused on harnessing the possibilities of new material sciences, new biological sciences, and new chemical sciences to create new things and to also drive significant productivity around other things. The other aspect of this investment in innovation and science and technology goes to the role of digitalization across the economy. And that will touch production productivity, logistics productivity, and ultimately also the productivity of capital itself, as data drives better decisions and the quicker flows of factors of production and final products and intermediate products throughout the economy. As the other guests have talked about too, the human resource capability has been invested in for a long time now. China is graduating over 1 million engineering students every year. This is a significant national resource that will be harnessed going forward in these new areas.
Mm-hmm. Warwick, of course, along with this investment theme, in terms of the foreign investment, there are specific measures, for example, completely lifting the restrictions in the investment in the manufacturing sector, improving access to the sectors in, for example, telecom and medical services. So more opportunities for foreign investors here?
Look, there are many opportunities for foreign investors, and what they need to do, of course, is to focus on the new areas of development rather than think about where the old opportunities used to be. So, of course, over the last 30 years or so, much of the foreign investment went into the development of manufacturing, which made significant use of China's long-term advantages in areas such as labour costs. Now, cheap China hasn't been around for a long time, and so continually investing in those sorts of areas, of course, is not going to deliver the kinds of returns that investors will look for. So it is all about getting involved in these frontier areas of digital technologies, of applied sciences, as well as some of the blue sky potential of the material sciences as well. There is tremendous work going on in energy, in energy storage, in travel, space travel, all those sorts of areas. And this is, I think, where some of the opportunities lie.
We're joined, of course, in other sectors here, including the stock market, the property market, and also this local debt issue. These are seen as challenges. So, what do we have, based on the government work report and also today's media conference here?
Yeah, I think in the stock market, the government is going to be introducing some new measures to beef up investor confidence, to tighten up regulations that that been loose holes in the past. I think these are all confidence boosting measures. The market has recovered a little bit. It's actually quite a bit. It's above 3,000 solid. In my view, solid at above 3,000. Shanghai Stock Exchange Index, Speaking of the real estate market, I think there are signs of at least stabilizing. I would say there's growth potential, due to China's demographic trend, but at least it's showing signs of stabilizing. At least it's
good enough.
It's good enough. Hopefully, it's not going to be dragging the feet of China's economic growth. Yeah. So I think we're okay. I'm pretty confident that we'll be achieving about 5% growth target by the end of the year.
Well, this local government debt issue, Yaojing. So are you seeing a solution to deal with that challenge?
Yes, actually, the local government debt issue has been, the central government actually have been addressing this issue for over the past few years. So I think the issue is not probably as serious as some would think, but I think the government has been very responsible in that it will maintain stability is the first priority that the central government has. So we do have about 50%, 55% government debt ratio, which is actually lower than most countries. And we are seeing that the Chinese government is ranging a 3% deficit for 2024, which is actually a little bit lower than the expectation of about 4 to 5%, which means the Chinese government is being very cautious about taking out more debt or taking more deficit and leaving some space for policy maneuvers. And also, we will expect the central government to issue special purpose bonds to address any of the needs that may need from the government balance sheet. Yeah.
So Warwick, 1 minute to go. If you look at the coverage of the Chinese economy in the Western press, in particular, there's almost like a China collapse theory again. If you focus on this problem, and you tend to have a pessimistic, let's say, outlook of the economy. What's your response? I mean, are you confident this, around 5% is going to be achieved?
Much of the mainstream Western commentary has actually just got the fundamentals wrong. So I tend not to take too much of it too seriously. There is a lot of wishful thinking in there, and it's dangerous wishful thinking, because if the Chinese economy did as badly as in many ways they hope and wish it would, they would actually suffer significant economic problems. On the question of local government debt, there is a very important point to note, and that is that the vast majority of Chinese local government debt is asset-backed. And in fact, a World Bank report from last year shows that there is a significant asset value overhang in relation to the debt. So the debt-to-equity ratio is actually very, very solid. The issue here is how to restructure the balance sheet to provide cash flow opportunities to service the debt. So it's not actually about a problem of debt to equity per se.
Well, on that note, we come to the end for today's discussion. Many thanks to our guests. You can also follow us on the CGTN app on YouTube. Thanks for being with us. See you next time.